We're joined from Geneva by Thomas Saulnier. He's a portfolio manager at Gaia Capital Advisors, which manages $100 million. Good to see you there, Thomas. When you look at the world right now, what worries you the most?
Hi. Actually, the macro picture these days is quite clear. We live in a bipolar world with, on one hand, Western economies facing low or no growth. They face huge debt, and on the other hand, you have emerging markets with growth potential, but they certainly have their own inflation issue. And I think the key element these days has been in Western economies this switch from stimulus policy to implementation of austerity measures, and we definitely think that it's certainly positive and useful to tackle deficits and to address debt issue in the long run, but in the short run it's going to weigh on personal consumption, and it's going to weigh on investment, so it's negative for growth in the short run. So
now, you manage a major sorry to interrupt you. I was going to say you manage a major agri-fund. Is the only way up right now as far as food and food commodity prices are concerned? Is that where the growth in that side of the commodity is coming from?
Yeah, for sure. Actually, in such a challenging environment, we definitely want to get exposure to safe assets, and in our commodity space, the two obvious safe assets are A, agri-land, and B, gold. So within our portfolio, we definitely increase the exposure to agri-land through investment in companies that have access and ownership to agri-land, especially in emerging markets where the agri-land is quite attractive, and farming is a business in emerging markets that is not subsidized, unlike in developed markets. And we also increase our exposure to gold. We think that 2008 cash was king. Now 2011 gold is king, mainly because we live in a negative real interest rate environment.
Even though, Thomas, sorry, can I just butt in? Because even though gold has lost 11%, and we have a number of analysts around the world who are actually saying, you know what, gold is a major asset bubble which is about to burst. Do you take a different view still?
I would not say so. I would not be so negative on gold. But what I can say that probably it could be from an investor point of view. If you don't have exposure to gold right now, I would not go for gold physicals, because it's probably a bit late in the cycle. So I would definitely favor investing in gold mining stocks. Simply because gold mining stocks have lagged the gold price appreciation recently, and right now you can find many gold companies that are in a producing phase, trading at really attractive valuation in terms of price to NAV, and actually in terms of enterprise value to ounce. You can buy gold mining stocks for $300 per ounce of gold in the ground. So definitely there is mainly attractive opportunities within the gold mining stocks.
You also said just a moment ago that you're interested in agri-land. What about the different sectors in agriculture itself? Well, we've got soybeans at a 5-month high. Corn predicted to rise even further. Very briefly, corn, wheat, that sort of thing, soya, bullish on those?
Yeah, for sure. Actually, the beauty of agri-commodities is that it's kind of decorrelated to the economic situation, especially because the main drivers for agriculture is long-term secular drivers such as population growth, change in consumption habits in emerging markets, limited arable land. So that's kind of drivers that are uncorrelated to economic situation. So from an investor point of view, to get exposure to agriculture is a good way to diversify yourself from the economic situation and the challenging times that we are going through.
They are challenging indeed. Thomas Saulnier, really great to talk to you from Geneva. Thank you very much.